Let's talk some stocks on the move with Diane King Hall. We saw Lyft under some pressure, but a few others of these, Diane, are going the other way. Dash is up 3%.
That's right.
Upstart's rallying pretty big. Let's talk DoorDash first, maybe, in the world of delivery, looking pretty good.
Yeah, it is looking good, and it kind of lines up with some of the data that we saw from Uber, especially when it came to Uber Eats. So DoorDash, it was a mixed picture, but investors really like how revenue looked for DoorDash. You saw revenue surge 25% to $2.87 billion. Adjusted EPS for DoorDash was 33 cents a share. That was a miss by a penny, but again, investors really like the outlook for DoorDash. You are seeing shares move higher right now. They also reported fourth quarter gross order value. That was $21.3 billion. That number was better than expected. And it just shows this strength that we've been seeing with regard to the consumer and consumer demand. It lines up again with what we saw from Uber Eats and that segment, the Uber delivery segment. And keep in mind, DoorDash has a bigger piece of the meal delivery market compared to, say, Uber. It's about 3 times as much as Uber. And DoorDash has been looking to expand beyond that. They've made these investments and partnerships with other sectors. So, for instance, for grocery delivery, et cetera. In terms of what their projections are going forward, they are projecting EBITDA of $550 million to $600 million. The midpoint is a little less than what the street is expecting. But the other thing they also authorized a buyback of as much as $5 billion of the company shares. So a lot boding well for DoorDash. And DoorDash has been trading similar to Instacart this year. And in fact, with this move today, we may see it outstrip it a little bit.
All right. Pretty impressive stuff. DoorDash able to really impress, I think, over the last year with a lot of bears and a lot of doubters and a lot of cynics for the stock. At times myself included, because they were not making money, for a long, long time, despite huge amounts of demand and people, not really having much choice during COVID but to order. So big comeback here from their high of 257 in that massive crash we had post-COVID.
Yeah.
So
and they swung into the black, so that's a positive.
Exactly. So that is a big deal for sure. Upstart. I don't know if this is a comeback yet. I mean, the thing traded $400 at one point. So, but at least it's a pretty big single-day rally.
I mean, look, it's a beat. They beat on both the top and bottom line. They posted a profit on an adjusted basis, 26 cents a share. Street was expecting a loss of 5 cents a share. Revenue, $218.96 million. The Street was looking for $162 million. In terms of the guidance, they're projecting first quarter revenue of $200 million. That's more than the Street was expecting. This is the fintech that we know does these, like, say, personal loans through these bank partnerships. They do a lot of it through these relationships. They say, the way their borrowing model works is based on machine learning, AI functionality. In terms of the loan origination, they originated more than 245,000 loans. That's up 68% over the past year. It's up more than 30% over the previous quarter. So firing on a lot of cylinders here in terms of the growth of their business. And now you are seeing some analysts respond in terms of upgrading it. JPMorgan Chase now upgrading it to a neutral. They previously had it underweight. Their new price target on this one is $79 a share. So still, they see it lower than where it is now, but it's having a huge rally today in response to these numbers, Oliver.
Wow. Yeah, good stuff. Loan business is good, it seems still. So
It points to the credit worthiness or credit quality that we've seen of consumers. Yes, we have seen some data points where it seems like there's a little bit of weakening with the consumers, but overall consumers have continued to be able to service their debt. And with the job market holding up, it bodes well for, say, a company like this in terms of personal loans. As long as consumers are able to service their debt, and they also say that the way their model works helps determine credit worthiness more than just the traditional credit score. Also want to mention one more analyst note, B. Riley upgrading its view on Upstart. They've got a buy rating now. They previously had it as neutral. Their new price target is $105 a share, Oliver.
All right. That's pretty juicy. So, all right. I mean, look, if a stock traded at $400 one time, anything's possible to the upside if it breaks back out again. So, should be pretty fun to watch here as it really tries to rip. The last one, speaking of comebacks, CVS. I mean, we've seen and heard the story of comeback many times, and it's been a failure every time. But how about this one?
It's been, I mean, last year was incredibly difficult for CVS Health and others in this space as well. So adjusted EPS, $1.19 a share. That was a beat. The street was looking for 91 cents a share. Revenue, $97.7 billion, also better than expected. Revenue in all of its divisions actually did better, whether we're talking about insurance, its drugstores, health services, all came in ahead of street expectations. In terms of projection, adjusted earnings for 2025, they're projecting that to come in a range of $5.75 to $6 a share. Some of the street views that as kind of conservative, essentially. They're calling their guidance, quote, appropriately achievable baseline with opportunities for outperformance. So it seems like there's some caveat there. They talked about the growth they're seeing, including, they said, pharmacy, consumer wellness. And they said they did couch that with, while we address the industry-wide challenges that have impacted our healthcare benefits segment. That's the CEO, David Joyner, saying we know he was the newly appointed CEO after they essentially pushed out their previous CEO off the back of that really difficult year they had in 2024, Oliver.
All right. So that's some pretty positive commentary there. But again, you know, we've kind of heard strategy and all that talk before for CVS, and hasn't really been able to turn it around. But we get through $70 and maybe a real technical breakout happening, because we're still kind of in a range that we've been in since May of last year.
There's still some headwinds. I mean, you know, when they talk about both the pharmacy benefit segment, although there is improvement there, it's not as, it did better than expected, but it's up from last year. That's one of the challenges. And then just managing the costs as well. All of this sector has had challenges managing that, especially with regard to the Medicare exposure. And then consumers going back for services that they put off during the pandemic. So that put some pressure on their margins. So there are still some challenges under the hood, but it is better than expected overall.
All right, good stuff. Thanks, Diane. Great assessment here.
You got it.
Of some comeback potential in those stocks. Good stuff there this morning with some nice bids into companies that had been under a lot of pressure in the last year, from Upstart to CVS.